I'm Will Walker with Crowdcreate, and I'm here interviewing Shally Hugh. So we want to find out exactly how she really finds her quality projects as well as matching serious investors of all classes and types with her specific projects. So Shally, why don't you start and tell us about your background, your career first, and then we can talk about some of your secret sauce, so to speak, of matching quality projects with investors.
I closed $4 billion. Yeah, so the project sizes that I had closed, and it was with GE and Bank of China, and so the average deal size that I did work on was $500 million per deal. So that's why I was able to close that large of a number. It wasn't like I did, 400 like little tiny deals. Anyways, not little tiny, medium size.
Yeah, I'd say those aren't tiny.
Yeah.
But anyway, yeah, impressive.
So, right, so my background is that I work with a lot of institutional firms in my career. Started with Cushman & Wakefield in investment sales on office and industrial and mixed use in the southern, western region of the U.S., 50 million and above. After that, worked with GE Capital on their $80 billion portfolio. At the time, it was GE Capital was an $800 billion portfolio, and GE Real Estate was 10% of that, so $80 billion. And we created stress test models for the entire company. I worked on their global portfolio and underwriting and acquisitions and dispositions on a portfolio level at $100 million and above. So basically, if any local team, it can be in Scandinavia, it could be in Greece, if they had a deal over $100 million, we would come in and close the deal, underwrite it, and execute it. And so, yeah, I worked with GE on a global basis for a while, and then after that worked with Bank of China more or less on the front end. I was an originator and deal execution. So this was during the time when China was inputting a lot of money into U.S. real estate, and so my first deal walking in to the bank was to close the Time Warner Center.
Wow.
At $675 million debt. And so I walked in, they're like, Shally, you need to close this deal. So I was like, okay. So I walk in, I do all the underwriting, I do write the deal docs, negotiate with all the partner lenders, the CMBS group, because it's securitized on the market because it's such a big single loan. Sure. And it was stable. Work with all the different counterparties involved, closed the deal, and then worked on the Sony building, worked on the Plaza Hotel, the Grosvenor Hotel, the Club Quarters, did two construction 80/20, 421A, HPD, HFA, bond financings at $550 million each. And so these are pure construction loans. Letter of credit and loans. And so on behalf of Moynihan Group and Brookfield, we were the lead arranger for that. Came in the deal when we were structuring, bringing in all the business partners, and then closed it out and asset managed it. So basically, if I was hip to hip with my lawyer, and with our lawyer, and if I wasn't calling him every 2 hours, he would call me and say, Shally, you haven't called, you haven't written, like, I miss you. after 2 hours, if he doesn't hear from me, because we had so many deals on our plate.
Wow.
And so, it's kind of hard to believe, because most people that are in, say, like a Deutsche Bank or a Goldman Sachs or a JP Morgan, when they'd underwrite a deal of this size, a $1 billion deal that needed $500 and $50 million of debt, you'd have a team of 30 or so working on that particular deal. Right. Whereas in my shop, it was literally me, one analyst that I had to correct all of the stuff, and my boss, which was essentially a political leader. So I had to run the whole thing. Wow. Which was, it can be done. And I realized, wow, you can really use a private equity mentality in a corporate bank, and it works. And GE was the opposite. It ran as a hedge fund, but under manufacturing standards with Six Sigma and all of these different efficiencies as a manufacturing company when it was running like a hedge fund. So they had the opposite problem, really. It was just, there was top heavy there. So yeah, it was interesting working in both.
But that had to teach you so many assets and so many skill sets that you've used ever since that we'll talk about.
Yeah, so I've always done deals in hotels, senior living, multifamily developments, affordable housing, office, industrial, retail, not so much recently. I don't think it changes that many hands, and there's a lot of repurpose going on in retail. And mixed-use developments. And so for me, when I look at deals that are at the $200 million range, I mean, from a mid-size developer, that's a big deal. Whereas for me, I've structured and worked with $1 billion to $3 billion deals regularly. So then, and all of the complexities that come with that, and close them and asset manage them afterwards. So to me, to look through a very complicated construction on a larger scale, because I've closed so many of them, it just comes second nature to me. Yeah, I don't get fazed by the large number, and I just always know that there is an answer to everything. If you don't know, you can find out. Like, there's really no stops. And the main issues that I have seen from these large deals is about picking the right business partner. And I see that is likely the reason why a lot of these mid-tier type of developers might not get to that next level, is getting that partner you trust, right? And so usually when you're at that kind of higher level, at $500 million to $1 billion, there's a certain level of accountability, trust, and institutional professionalism that's just ingrained. So it's a lot easier to work in that realm than it is to work with, I would say like the $3 to $20 million deal sets, right? Because then you're really looking at almost, family office, personal wealth. People are more emotionally inclined, and there's less, I would say there's less qualified folks, because there's a lower barrier to entry.
Right.
And so that's, obviously you can use that, ranking it from house flippers, right? And then once you make some money flipping houses, and anyone can do that, right? Essentially, you can start with like a $10,000 house in Michigan or something, and then build that into a commercial building, and then if they know how to partner, then they would have a capital partner, and then move on to other and bigger deals. And then people do that at the same time at a mid-size level as well. Like, for instance, if you're normally doing value add deals at say $20 million. If you want to do your first $200 million deal, you generally would have to align with like an insurance company or a capital partner like Colony or Ares, or somebody that would also provide somewhat of a completion guarantee, right? Their balance sheet is strong enough to bring you that confidence,
fulfill that.
Right, and so it's been a really interesting ride, and so right now I'm also doing like co-GPs. I've partnered with different developers, and I'm essentially doing what I've done with GE and with Bank of China, and utilizing that as a capital markets arm and investment acquisitions head for the different partnerships that I'm involved in.
That's great. Well, it's impressive. Where are you finding, I know myself, I've been impressed with some of your quality projects that you're working on now, but what are your qualifications in general to find and to really look at that deal pipeline, or to evaluate and navigate in that world? Can you tell us a little bit about what your what you've learned over the years and how you are finding and navigating these specific high-quality projects that you're currently working on or always on the lookout for.
So most of my deals come through a closed network of folks, and it's mostly off-market, directly from the owners, if not a colleague that is directly to the owner. Mostly off-market deals. Usually by the time they're marketed, I mean, you're looking at large funds coming in, so there's really no point to chase them. Like, let them chase it at the last dollar that they can get it at, because they have money that they need to get out at a low basis. But if you're looking for really good returns, like a real deal, the only real way is to get it before it gets marketed out by the brokers of the world, like the CBRE, Jones Lang LaSalle's, Colliers, and so the first thing to do is to get a pulse on the market. I mean, really, you have to. It's the market and the product type, right? And so, I go to a lot of conferences and read a lot of market reports from a lot of data sources, and then you really have to. And then I also talk to a lot of different funds. So if a really large $2 billion fund is saying, we don't do this asset class and we don't do this, we've historically done this, but we don't do this anymore, listen to them. Don't go in those asset classes yourself, because those larger firms hired marketing teams that went out and helped them make their strategic decision as to what they're investing in, what they're not, and they're pulling out of.
Yeah.
And then banks.
So in that case, it's more about what to red light a little bit or yellow light as opposed to green light. That's almost equally as important when you see a large fund like that that's making a pivot decision or to leave a particular
right. I mean, like usually
alone.
when you get a deal that you're really excited about, obviously you have to do your own due diligence, your own market research. But a lot of times initially I'll put out first a few feelers to some colleagues in the industry that work at really large equity funds to see, hey, is this something that you guys look at anymore? And if they say, hey, we're not in this product type at all, like that's an indicator.
That makes sense.
So what's going on? There's going to be a lot more supply coming on. They're expecting, or maybe they're expecting a turn where they're going to then come in at a lower basis. So there's just certain things to just be aware of. And then same thing with lenders as well. When a lot of lenders are exiting it, I mean, lenders are generally, I would say, they're 2 steps behind the trend.
Yeah.
It takes them a while because there's so many departments, and it just takes a while for them to change their strategy. Whereas more equity funds, hedge funds, private equity, like they can change it within the month.
Yeah.
Right? We're just like, oh, we don't want to do retail anymore. We're not doing retail anymore. Whereas with the bank, it takes maybe like a year to prove that.
Right.
And so yeah, I'm always keeping my feelers out there, talking to a lot of different people, getting different feedbacks on whatever deals that we're seeing. And obviously, it has to compel me first before I reach out to potential investors.
To make that effort.
Right.
Get that data back. What size deals, Shali, are you typically? Is there a size of offerings and things like that you look for? Is there any parameters that you might tell our audience about what would fit your current or future plans as far as looking at different projects? So,
I mean, right now we're looking at 2 office buildings that is a $50 million portfolio, the both of them, and so that's more on the mid-range for office. It's more suburban. Value-add office. We're also looking at multifamily in that range as well, a little bit lower, more on, so like a portfolio of 3 smaller multifamily that'll come out to about, $35 million or so. And so right now we're kind of keeping it at that mid-level just because the larger developments right now, considering how much there is on the market coming online in the next 2 years. It's a very risky thing. So our focus has been on more redevelopment plays, rebranding plays for hotels, transitional plays versus like full out construction. Although there is a construction that I am looking at, just taking a look at in downtown LA, that's requiring a certain amount of GP, but the problem with that is that I've heard issues with the current sponsor where they may not be trustworthy. And so usually when you hear that, sometimes you just think, life's too short. I just don't,
Right.
I don't want to.
Other fish in the sea
Right.
too.
Right, like do I even
explore.
step into this pool knowing that this person is a total shark?
Yeah.
Is that worth
Yeah.
my time, right?
Yeah.
So,
Spend all your time watching your back, so to speak.
right, right,
Not worth it.
right.
That's great. Well, one of the things that impressed me, because we met at the IMN conference, recently real estate conference, was that you are really able to meet and evaluate, I'd say, different investors, different fund managers, different people. And I know you speak at many of these conferences around the country and around the world. So maybe you could just give us a few things you've learned about navigating or meeting the right, in how to meet the right investors and how to match them up with certain projects that you're working on or dealing with.
Right. So for me, when I'm meeting investors, well, first of all, when you're in these networking events, you want to identify really quickly who's in the room and how are they useful to you, right? And so you only have a certain allotment of time at a networking event, maybe an hour, maybe two, and there might be 100 people in the room, and yeah, I mean, you just put your feelers out there, kind of see what they do, and I would just like more or less hone in on a few folks that I think are, could potentially either be investors or deal folks. When they're more on the service provider, they are very helpful. Service providers can be very helpful, but I try to limit my time with people that are not decision makers. Same thing if I'm meeting an associate or an analyst or whatnot. There's only so much power and influence that they can, put up the line,
Right.
and a lot of times they're looking out for their own career, and it becomes a personal thing for them. And sometimes if they're super young, they really don't know. They don't want to push anything. So
Right.
so I find, like just kind of skip over them completely altogether. So if you notice, almost everyone that I knew at the conference were either the actual owners, right, of
Yeah.
the funds, or the actual developer that co-founded, if not founded, a development firm. I generally don't speak to, the folks that work for them, just because a lot of times they might be doing different operational functions and wouldn't know really how to place a certain deal or whatnot.
Yeah.
And so, but they are helpful, but you kind of want to limit your time, recognize it, and then kind of
Yeah.
politely move forward. And and everybody does that. Like everybody networks with a purpose, right? So people shouldn't be offended if you just kind of like went on, it's very nice to meet you, and then move on to the next person.
Right.
But yeah, generally, I right away ask them questions like, how much capital are you looking to output this year? That answer will guide you on how big their deals can be, right? So if they say, we need to put out $100 million, that means that their deal size is going to be anywhere from like $5 to $10 million per
Right.
deal, right?
Relatively small.
Right. Oh, we have to put out $1 billion. Okay, you need to do some big deals.
Yeah.
And then what's your strategy? Like, what's your risk return appetite? And people can generally boom, boom, boom tell you in like 4 different points what they're looking for. And then you just keep that in mind, or put it on the back of their card, whatever.
Yeah. Yeah.
And then
File that away and
right.
keep that as
And
great
follow
data.
up when you can. And I find for me, I like to establish good relationships with certain investors and developers and just people in the industry. And usually, we're aligned just by our, I guess, our energies of collaboration. And so, eventually we'll call up each other and, hey, want to do this deal? Hey, let's do this deal. And all of my deals come through friends or people that I've known for a while in the industry. Very rare do I get like a quality cold call. I don't get quality cold calls. All my cold calls are, I'd rather not have them.
Right.
Yeah.
The ratio is so small.
Yeah.
That it's not worth the exploration.
No, I mean, I could tell, but, when I'm being cold called, generally that means that the deal doesn't have much legs to it. That's why they had to call someone they didn't know.
Yeah.
This is such a relationship-based relationship-based community in commercial real estate, and these higher number dollar signs that you generally know everybody, or some of the people, they'll refer you to someone. And if you're just straight cold, they either don't know how to underwrite a deal, they don't know the deal, it's not a good deal, it shouldn't be done.
Right.
Yeah.
So not worth your time and effort to go any deeper. That makes a lot of sense.
Right.
I know you've got some high quality projects right now that you're working on. You just related some of them. But also I know you're going to be going into your own GP fund at some point. I think that makes a lot of sense. Personally, I've been really a big fan and would be a big fan of having you head up something like that. Maybe you could touch on timelines and when and how that might look moving forward in your future.
Okay. So right now I have a few deals that we're currently working on, and we're raising capital for, as well as structuring, and still bringing in all the different parties into the deal. So one is an opportunity zone fund hotel that's completed. It's completely finished construction. It's just pre TCO, and so it still qualifies for opportunity zone, and so that's a really great way of getting tax benefits from the new opportunity zone laws, and we can refi.
It's a high visibility area.
High visibility
as well.
It's new build.
Yeah,
no construction risk. You can refinance out of the deal twice, so you're still somewhat liquid, and it's non-taxed. And so, you basically get your money back out in like 2 years or so, and still have the ability to take out that next tax accretion that you build up for the second part of the investment. And I mentioned I'm working on the 2 office deals, which are value add, and they're double X for sure, because of the low basis that we're getting them at, and these are pretty much home run deals that this is why I'm a part of it. And another one that we're working on right now is a transition from a hotel, garden style hotel, it's a 130 room hotel, into senior living. In this particular area, which is in Alabama actually, it's in Huntsville, Alabama, and that's one of the highest growing aerospace and technological engineering service providers for defense. And so the average median income there is actually $160,000.
Wow.
Yeah, it's like San Diego.
Yeah.
And
without the high cost of living.
Right. But it's just this particular area.
Yeah, no, I get it. It's a big aerospace defense.
Right, and so people bring, their parents there. People want to be close by, and the instant one of these senior facilities open up, they fill up within 3 months.
Wow.
I mean, they're just completely full.
Wow.
And so that's another venture that we're working on.
Real quick, that's really interesting. How did you find that? I mean, did you...
Referral
Again, from someone you knew and trusted or had done business with before?
No one that I meet has been a cold call.
Yeah.
Like, none of my deals have been from an outside source. Like, they've always been from people that I've known in the industry for at least 5 years, or people that even if I've met them, for a short period, we really got along and spoke in depth for at least 2 hours or so, so that we got a good feel for each other, because there are versions of people, right? Everyone's a version of someone right?
It's true.
And so you just try to stay away from certain people that with certain traits that will lead you down a very difficult path. And when you focus on the folks that
are serious and qualified
and have good deals and have good intentions, and I just kind of try to pick those people along my journey, and
that's great.
So it's really very much a people business.
Yes.
Very much a people business.
Yes, it makes a lot of sense. Well, and I'm sure you learned a lot of this skill set. I mean, you have a natural ability, but you learned a lot of the skill set with many of the larger companies, and especially since you had to wear so many hats at GE Capital and other, even Bank of China, you were dealing with many multinational investors and projects and issue originators. So that takes a special skill set and a learning cycle, I'm sure, to develop those skills that make you the successful business person that you become. And I really congratulate you on your success. I look forward to working with you at Crowdcreate on your GP fund and other projects going forward. I know you're going to have continued success in all the marketplace that you contend with. So if you want to tell anyone, give an email or any contact information, you can. And certainly we look forward to more segments with Shally and her continued success, and where you can participate if you're a qualified investor or you have a quality project that would fit the parameters. So maybe you want to let them know some contact info.
So my email is shu@ariellacapital.com. That's SHU at Ariella, ARIEELLA, capital.com. And yes, we are raising a GP fund, and it would be one of the, it's definitely not the first, but one of the few women-run GP funds that would be very focused on value-add opportunities in mid-size products in multifamily hotels and office, and would give you pretty much opportunistic type returns because we're focusing on second-tier markets, second-tier markets like the suburbs of San Diego, not downtown CBD San Diego, or in
where it's overheated,
Phoenix, or in Huntsville, Alabama, and these are all value add, not ground up constructions, and yes, we're buying them directly from the owners. Or
I think that's really important that you gave out that secret sauce, because that's important to get the right value add at the right juncture.
Right. Especially where we are in today's market. I mean, if you've taken a look at the stocks, right? I mean, it's been overinflated for the last 4 years.
Absolutely.
Right. I mean, if you look at the historical graph from 1950 to now, it's due for a correction by half.
But they just keep pumping money and liquidity in there to keep it inflated.
But it's due, right?
Yes.
And once it's due, I mean, real estate is really not far behind that. And so there's a reason why people that are trying to construct right now, I just say, good for you, but let's see the finished product.
Right. And let's not hang out there too far.
I'm already seeing people, I'm already seeing projects switch hands on development projects. Yeah.
I believe it. Well, once again, thanks. Continued success. I'm Will at crowdcreate.us. We'd love to entertain and also to support quality investors, successful investors, and project managers like Shally. Look forward to seeing you in our next segment. Thanks again, Shally.
Thank you.
Great job. Take care.